Awesome. Welcome, everybody. Welcome to today's session. Great to see nearly 50 people on right now from all across. We're getting messages here from Congo, from Zimbabwe. We've got Team Approve in the building. We've got London. We've got Tanzania. Wow, so many different people. Keep sending. Give us a shout out where you're tuning in from. Really excited to have this wonderful panel today, as Naji mentioned. I think I'm really excited to learn personally because there's so much wealth of knowledge across so many different countries that these people have expanded and built their businesses in. And so I think, I met Paul for for another time last week, and he was talking about being to over 18 different countries in Africa. And I was like, wow, with an African passport, that's almost impossible. But I'm glad that somebody's able to try to push these businesses. It is possible. Cool. Well, ladies and gentlemen, to get started, I'd love to also introduce the panel. These are our special guests for tonight. They're the ones making it happen across different countries and different challenges they face to build the digital identity and verification for all of us to be able to build products on top of. So just to kick off, I would love to just go each one really quickly, your name, what you're working on, and one fun fact about you that nobody might know on this who's tuning in. We'll start with,
Hi, everyone.
Yeah, go ahead, Paul.
Yeah, great. Hi, everyone. My name is Paul Damali from Approve. We help financial services to verify any information their customers give them. Fun fact, I have a Nigerian sister I'm looking for.
Nice. I heard this story. It's pretty funny. Awesome. Mark, you want to go next?
Sure. Thanks, Menchie, and hello, Paul and CJ. So welcome, everyone. My name is Mark Straub. I'm the co-founder and CEO of Smile Identity. And Smile Identity is a platform that tries to make it easy for businesses to verify the true identity of their users. And we do this across Africa 1 million times a month for 15 different ID authorities that we've connected with. And one of maybe a fun fact about me, because I just saw something recently that connects it maybe to the other panelists. So although I haven't played much music since starting a company, I was a saxophonist for like over a decade and played in a bunch of bands. And I think at least one of the other panelists on here maybe learning the saxophone. So happy to talk music if you want to get into it later.
Nice. Love it. CJ.
Yes. Hi, my name is CJ Aguela, CEO for VerifyMe. VerifyMe is an ID tech company building products to close the credibility gap across industries in Nigeria as our main focus, but eventually spreading across Africa. To date, we're doing pushing up to 50,000 address verifications a month, and in Nigeria alone, about 250,000 ID verifications. And about 30% of commercial banks in Nigeria use our service. Fun fact about me is, I guess it's the same on music. When I was about 9 years old, I had a great music teacher who put me in an album. So we actually I was in an album at the age of 9, and we're called the Rainbow Singers. So that's, I guess, one fun fact.
Nice. So we'll be playing that album today towards the end of today's session. So giving you that exclusive sneak peek. No, we want to make sure the team finds it, so we can drop some throwback Thursday vibes in here. Really cool. So digital identity and like just even trying to solve identity issues is a massive problem, not just in Africa but across the world. Why are you guys working on this? Like, what really pushed you or motivated you to get started in the first place? Maybe CJ, let's start with you.
Sure. For us, the journey started from a harrowing experience. My business partner, founder for VerifyMe, Tunji Oluwole, moved back from the States with his family in 2013. They hired a cook, checked the cook through a staffing agency. And after a few days, they were actually poisoned. And he and his family slept for 18 hours. And by the time they woke up, they were robbed. At that point, I think that, the big gap we had in credibility or trusted identities was exposed, and Tunji saw that. And out of that passion, we talk about it, how this solution for us really came out of passion to solve a problem in our country that we had seen. Tunji started really with in the domestic space. In the journey, we have about 2 journeys, and for about 3 years, we're quite successful, actually registering hundreds of thousands of workers in the domestic space and doing verifications across Lagos. And at the time, there was no digitization in terms of APIs online from the government, but we were at the forefront of it. And at some point, we realized that the credibility gap was one across industries, and we actually decided to pivot to become an ID technology industry. And we started to build fintech products. And to date, we're now a company that enables fintech. And we also enable people who want to close the credibility gap at high volumes to get legal trusted identities from us, from multiple authoritative sources of identity, specifically in Lagos, which is our specialization at the time, and also the biggest market in Africa.
Mm-hmm. Yeah. Massive market, a biggest city, right? No, is it Cairo? Most populous city is Lagos.
Lagos.
Probably, yes.
Okay.
20 million people, maybe more.
Mm-hmm. Who knows? Mark, tell us why KYC, why digital ID?
Yeah, I kind of came at this from 2 sides. There's the personal side, which is like I kept hearing these stories. So I was an investor before I was an entrepreneur. And I was doing business across both India and different markets in sub-Saharan Africa. Originally, actually, I was an investor in companies like Kopo and Branch and Flutterwave, very early investor in those companies. And traveling across Africa, of course, as I'm sure Paul's experienced, you run into all kinds of issues of payment or identity checks or not being able to get a visa. And you might think that maybe like, oh, if you got a US passport, like no problem. Well, that may be that may be true for like border checks, but if you want to buy an airline ticket online and you're trying to do a card not present transaction, there's a very good chance that your ticket's going to get canceled by the time you get to the airport. And so there's all kinds of these frustrations that that Africans deal with in every part of their life every day, and they exist sort of most acutely in many African countries because the infrastructure hasn't been the same as it's been, let's say, in Europe, the United States, although that's changing very rapidly. In fact, in many ways, things are leapfrogging. But the other thing that was sort of, the other sort of realization I had was that all these companies I was investing in, every time that they tried to get to scale, every time they tried to grow their user base from, let's say, 1,000 new users a week to maybe 1,000 new users a day, they would run into problems of fraud. And the only way they could solve it was what I called the 3 Ps. It was either people, process, or paperwork. So you basically just start throwing friction at your users and frustrating them. And that's not really a great solution for the long term. So I began talking with some of those founders, some of the African fintechs that I was working with, some that I just knew that I hadn't invested in, and talking with what would be the solutions that they would need to be able to scale the way they wanted to. And that was the beginnings of Smile Identity.
Mm-hmm. And so also for everybody who's on the session right now, Mark's still investing. So if you want to find him, ping him after the session. So, for those who want to pitch their companies, come through. Paul, tell us about
I don't know if
journey.
I approve that message, but we'll see. Maybe it's super compelling.
Cool. Paul, tell us about this journey. Where did it start for you?
Yeah.
Why?
Yeah. I used to work in banking at EcoBank. So I saw the whole problem firsthand. I would go onboard customers, bring them back to back office. Back office would tell me that you can't onboard them. And actually, I really encountered this problem as far back as age 18, because that was my first encounter. I was working as an insurance salesperson. So I've been very close to the problem, both on the consumer side and the administrative side. But more importantly, back in 2018, I was in San Francisco, the Bay Area. I had wanted to open a Robinhood account, and I went to a banking hall, told them that, hey, I want to open a bank account so that I can do Robinhood. They told me, no, straight up, no, you can't have one. I asked why, and they were like, well, we don't know you. Like, there's no way I can figure out your identity. So like someone from Africa. So that was a very surreal moment for me. I was like, oh, wow. That really means that Africans really are disconnected from the world. We don't have opportunities. And that is where the vision came from, really, to be honest. And so at Approve, we say we are connecting Africans to economic opportunities globally. And that is what really Approve is all about. And that is where the journey, this build up of experiences, being first-hand experiences with customers and my personal experiences made it, really critical for me to get on this journey.
Thank you. Asij, I have a question for you specifically. Regulators issued more than $10 billion in anti-money laundering fines to financial institutions in 2020. That's up 26% from 2019. What do you think is going wrong here, and how do companies like yourself help other people do better?
And we see it every day, and we see it along with our customers. Many times people call us all of a sudden and they have to plug into our ecosystem because they got in trouble. The problem is, first of all, there is no real infrastructure layer for proper KYC delivery for companies that want to grow very fast. This has caused a lot of companies that are going to be consuming identities at a high rate to not be compliant. So the regulators are coming after them, and it's almost like a catch-22 because we need compliance so that they can, basically use more KYC and actually have better products or less risk. But the resolution to that actually is also KYC has been very expensive, and so it's also almost prohibitive. So one of the things, for example, at VerifyMe is, and one of the reasons we're really, we say we're not going wide, but we're going deep in a place like Nigeria, for example, is 2 years ago when we arrived, an address verification in Nigeria was about 2,000 naira. Today, VerifyMe Nigeria is giving address verifications to financial institutions for 600 naira. With a logistics engine of 10,000 agents across the country, we've been able to drive the price down. And what we found as a result of this is that customers, because the price is less prohibitive, are actually able to do more compliance. And as our prices have become more commercially competitive, we found that customers are using our products more and more. So case in point, for example, we had about 16 banks sign on to us just in 2020 alone. So this is evidence that enforcement is working, but it's also evidence that digital, cheaper, quality compliance is also what is going to drive customers to use more KYC and close the loop on risk and money laundering, and also huge security risk as well that we have.
So you've seen this shift. So for those in the audience who don't so about 2,000 naira is about, I'd say $5, something like that. And then about, you said 600 naira, 500 naira, 600 naira?
600 naira now. So we're doing it for about $1. And this is a CBN Tier 3 anti-money laundering compliant verification that we do for that price, yes.
Okay. And so that's probably, over time technology got better and then help you guys reduce the cost of providing these services. Is that, or?
Exactly. Well, technology got better. We were able to build a very strong solution that helped us manage agents, select agents, audit agents, prune agents, and grow a very solid agent network. And getting higher throughput also allowed us now, because we have this agent network, drive our costs down. So we're very interested, definitely, in going to as many countries as we can in Africa. But our first concern for us is building a realistic KYC infrastructure that the industries can afford. And as a result, we are actually digging really deep in the largest economy in Africa so that we can provide that very, very affordable KYC. I look forward to a time where KYC is even going to be 50 naira, which is maybe 10 or 15 cents, which is really where it needs to go. And so we're in that fight and we're in that journey for our customers.
So I want to understand this a little bit better. So, Mark and Paul, you guys are in multiple countries, multiple jurisdictions. You work with multiple bodies of regulation across all these countries. What was the theory for you when you guys were thinking, okay, go deep in one market or do it at scale? What decision-making process did you go through and why?
Okay. I mean, all right, Paul, do you want to go ahead? I'm happy to
Oh, no, go ahead, Mark.
Okay.
You can go ahead.
So for me, it was the same problems I was hearing. They were consistent, right? I was having coffees with people in Kampala, and then at in Lagos, and then in Arusha, and then in Nairobi, and everyone's talking about the same problem. They would describe it in different terms, but it was the same issues or same set of issues. And then inevitably, the companies that we would start talking to in one market, they would figure it out eventually, usually through some combination, like I said, of people and paperwork and process. But then they would go to the next country and they'd have to figure it all out all over again. And so there was this repeated kind of duplicative effort that was not great. It wasn't really great in the first country, and then it wasn't really great in the second country. So it's not going to be great in the third country. And now that slows down the rate of scale and the rate of growth. So, Paul was talking earlier about wanting to get a Robinhood app. There's companies coming out of Nigeria now that allow you to do stock trading. There's a couple of them, some of them backed by Y Combinator. Really good tech, really good design, great user experience, but they need to be able to operate not just in Nigeria, they got to operate in Uganda. They want to operate in South Africa. They want to operate in Ghana, in Cote d'Ivoire. And either they're going to have to go through that same process in each country of trying to figure it out, or wait until someone like you, CJ, gets to that country, or and builds up the ecosystem, or have one solution that's going to work for their needs across as many markets as possible. So we've been from day one, we knew that the answer for us was to build a Pan-African solution. That was largely kind of because the nature of the companies we were talking to, they all had aspirations to be Pan-African.
And Paul, before you go in there, like, I want to understand from a perspective of going to a new market, right? You recently expanded, I believe, to Egypt. Like, what does that look like? Going to a new country, a country that maybe you're not from, it's completely new for you. And how do you get a regulatory body to trust you as like, hey, I'm going to do KYC for your people? Like, that must be, tell us about that conversation and how that goes.
Yeah. From day one, we've always wanted to be Pan-African, and that is how extensive the problem is. And so we've been always talking with big and large Pan-African entities like Ecobank Group, and they'll tell you that, look, if you're not in 15, 20 African countries, you don't make sense to us. And so that immediately meant for us that we needed to pursue a strong expansion strategy, but a strong expansion strategy comes with compliance. You need to think through compliance. And what that meant was that if you really want to do that, you need to be on the ground. So consistently, we mapped up all the countries that we wanted to be in, and I just took my bag and traveled in each country. Now, relationship building is like the biggest thing. If you can't build the relationships locally, then you can't have access. Understanding the local nuances, speaking the language, speaking to founders in these markets. If you can't do it, you can't build a relationship. So for us, we honed all our strategy around building relationships, having local intelligence, understanding what local intelligence and how it's important to scale, and we basically built a whole compliance strategy around that. And so, for example, for Egypt, I mean, you would understand that doing business in North Africa, they are not so used to seeing Africans, Black Africans, right, doing business with them. And so we needed to build a relationship over time. And so, well over 9-10 months, we really kept at it, told our partners that, hey, we want to make sure that you trust us, you understand what we're doing. We want to have your access to your network, your relationships, including the regulator. And that is really where everything came from. Being able to connect within those local networks really helps make a case for you.
So in other words, Paul had a lot of Egyptian food on his trips to Egypt. Very, very cool.
Yeah, I'm going to second what Paul says. I mean, and it was very similar for us getting started. I mean, you have to spend time building relationships. And when we got started, I mean, I can't remember how many times I was going back and forth to Nairobi. We eventually had one of our Kenyan team members, who's now our Kenya country manager, basically was visiting the Idea Authority every day or at least every week, but usually a couple of times per week for 17 months.
Wow.
So you can imagine what that's like. I mean, sitting in an office with a briefcase, waiting to be seen. And then we did the same thing in a bunch of other markets. And now, of course, we're 25 people from 11 countries, so we're in a lot of different places. But we have people doing that same kind of on the ground work because, as Paul said, relationships are what build trust.
Wow. So if y'all want free food, go work at one of these government authorities. So one of these three gentlemen will come and see you and take you out for a lot of different meals. And CJ, we've seen circulars being issued by the Central Bank of Nigeria, more recently about cryptocurrency. We've seen many different things that have popped up affecting startups as well. What's your take on just your type of business in this world, in this space, where you do see circulars pop up like that? And the second thing for you is, what keeps you up at night?
So in terms of regulation, I think that we're a little bit past the hurdle. We are licensed by the Nigerian government to carry out KYC in Nigeria. So we have a NIMSI license. We actually are also in the financial inclusion space in Nigeria, where we are able to digitize Nigerians. So if somebody comes to us and they're unbanked, we can actually get them their NIN as well. And I think this is, as a result of, the going deep into the infrastructure. And I completely agree that the eventual goal for Africa is at some point, would be definitely a Pan-African solution. And I think it's just a viewpoint issue because I think that's fair. But from our perspective, we wanted to have an ownership in the infrastructure layer, KYC infrastructure layer for the largest economy in Africa. And so we did that. In terms of compliance, I think that we're fine. We're licensed by the government, and we're regulated by NIDA and NDPR. What keeps me up at night is, I would say, some regulation that doesn't necessarily protect the KYC industry or look at the KYC as a standalone industry from maybe the fintech industry or the telco industry, where there could be some crossover. I think that in our government, particularly in Nigeria, there needs to be some understanding that clear lines need to be had for many reasons, by the way, because you don't want KYC to become proprietary information. Because when it does, if computing companies are using it, when it does, then people don't report it. And when reporting doesn't happen, it now impacts getting mature credit reports in a country over governance. So those are the things that keep me up at night in terms of, I hope, we're looking at it from that perspective. But, we're very excited about, the technology stack that's been built in Nigeria, and things are moving very rapidly.
Mm-hmm. And Paul, thanks for that, CJ. And it's really cool that a lot of these governments have these sort of policies that are laid out. I know quite a lot of governments in Africa have data privacy laws, right? Some people have data storage laws where a lot of the data is required to be on the ground, in hand, held by local servers as primary data. Paul, how do you and your team navigate that and navigate around these data privacy laws that are required by the governments?
Well, to be honest, Ben, when it comes to data protection, we don't compromise. We just make sure we are compliant. Because I think that consumers deserve to be protected. And just for your business interests, you can't say you want to navigate the regulation. So, for example, a country like Rwanda, they require you to have data. They don't require you to fly data out of their country. And so you've got to be very specific, use the data hosting infrastructure in the country, make sure you're compliant, register. If there's a data protection certificate you have to get, just do it, because that you can't be in the business of playing with people's data. And for us, we make sure that in each and every country that we are in, we are compliant. So we're going to South Africa, you have to be POPI and FICA compliant. If you're in Ghana, you have to be DPA compliant. In Nigeria, you have to have that your DPO process, right? You just can't, there's no two ways about it. Because you see, by default, our companies are more or less the infrastructure that enable the fulfillment of these regulations, right? We are RegTech companies. So you can't be a RegTech company that's breaking the law, basically. It just doesn't make sense.
Mm-hmm. And Mark, thanks for that, Paul. Mark, coming over to you, on your side, how do you show up, right? You fly to Tanzania, let's say, and you show up and you go to the right, like National ID Authority here, and you say, okay, I want to provide, digital KYC solutions for banks and other financial services building out here. How do you build that trust? I know Paul talked a little bit about this whole, but with a lot of the governments in Africa, speaking from my personal experience, it's like, oh, like, who are these people? There's all this like question about like, where is this data getting stored? How do you deal with that and convince them to give you access to, let's say, a national ID database where you can look at national IDs and verify these people?
So first of all, every country is a little bit different. So yes, there's privacy regulations and there's data storage regulations, but each country is a little bit different. And so the way that you work in each country has to be specific to that country. So in Ghana, there's a data processing license. You apply for that Ghana data processing privacy license. In Nigeria, you've got NDPR, but you've also got 5 different popular ID types in Nigeria. So each of those is a different ID authority or a different set of rules and regulations that you might be working with. In Kenya, it's relatively straightforward. There is one ID authority, although there's now a second one on the horizon, so there may be 2 by the end of this year. But each country is a little bit different. Tanzania, and this is actually what we do country by country, we don't always just say, okay, we're going to do things the same way in each country. So sometimes we go and we partner with a local company. And we see, okay, the government says that there's a local company. This company is the company we trust. This is the company that's carrying out the policies that we've agreed to. Talk to them, come back to us, and show us a piece of paper from them that says that you're following these rules. So in Tanzania, we have a local partnership with a Tanzanian company. And we'll do something similar in Uganda. And each country will have its own sort of setup as to how they would prefer to work with companies that are in the digital KYC space. We skipped over one question that you had earlier. I think it was about crypto, and I saw some questions here in the comments.
Yes, crypto.
Folks about crypto. I want to come back to that because it's actually, compliance is not just about our compliance. It's also about like, well, what is the requirement on the end users or on the companies that are providing these services? And obviously, a pretty big news happened in Nigeria last week. If people are not paying attention, we should probably talk about it. So the Nigerian government, the CBN, basically the Central Bank of Nigeria, announced that it was now banning or restricting transactions that involved crypto and Naira. So if you wanted to trade Naira for crypto or crypto for Naira, those transactions are no longer allowed by the Central Bank of Nigeria. And so there's a whole host of things that are happening and some unwinding that's happening because there's a very popular crypto space in Nigeria. I think it's definitely top 5, I think, countries in the world for crypto transfer. Something like $400 million traded hands last year of cryptocurrency, just in Nigeria alone, or by Nigerians. So the challenge here is, and it's actually not just crypto that's been affected. There's been some other announcements the last couple of days. Many, I think as CJ was mentioning, many companies that basically use banks as a backstop to offer financial services have also had those relationships severed. I think the challenge is that if you're a fintech and you're trying to innovate, you want to have a solution that's compliant. You want to be able to block fraud and prevent fraud on your system. But you also want to be able to operate. And I think the challenge with some of these decisions that we've seen made, more recently out of Nigeria, but they happen in other countries too, is that it sometimes seems to be a knee-jerk reaction. So the regulator will come out and announce something and then sort of force everyone to pick up the pieces. And I think that's challenging, but it doesn't mean that they're not going to try to do things. So these crypto companies, they're just going to move offshore. They're now trying to do peer-to-peer. They're moving to find other ways to do business. And for digital ID companies or KYC companies like us, on the one hand, we want to help these companies meet whatever the regulatory obligations are. But we also have to figure out, well, is the state saying that these companies can't do business at all in the state? Or are they just saying that they don't want them trading crypto in the state and therefore people will move the crypto offshore? So I think the regulators are going to have to catch up a little bit because they've been making announcements without necessarily always thinking about the consequences of those announcements. And even so, we've seen things like the Nigerian government making these data protection policies and at the same time contracting with Canadian companies or US companies or European companies to do different projects for their own federal purposes. So then the question is, okay, if you're going to set this policy, like you have to, sort of adhere to it for not just the people you're regulating, but also for yourselves. So I think we're very much fans of clarity in regulation, but also consistency in application.
I bet that makes part of your work pretty hard, right? And especially like coming to you, CJ, like, want to hear your perspective on the recent crypto ban, and like even with your business, you probably serve some of these players who are large, crypto wallet platforms for people to use. How does your team take something like this, and what are you guys doing to support these companies going forward?
Mm-hmm. And I think Mark mentioned it. So the main issue is we need to look at how they're going to come back in. I strongly believe it is in the end, but we have to look at it from the government side. So first of all, let's really sympathize with all the crypto startups that have been around, and perhaps there could have been a softer way or softer landing to do it. But governments generally don't do things where they don't have some control, or where there's so much anonymity, which is the case that we have in this current crypto ecosystem that we have. So I think it's also about finding a balance. Maybe perhaps it's not about not being able to do crypto in the country, but as long as you can link it to identity, then you can do that crypto, which perhaps is what the conversations we're trying to have around is, maybe KYC companies, our service is basically what can bridge the gap so that they can, come back and operate in Nigeria. So that's the way I see it. I do think sometimes we move very quickly with policy without properly involving the industry. It's almost like you wake up in the morning and you're like, wait, what?
Surprise.
I mean, could you have talked to the people? Because everybody has an opinion, right? And to some degree, everybody's opinion is valid. So just because you're a political leader doesn't mean that everybody can come to the table. So it's really very difficult for a lot of the crypto startups. I think that we need to have a conversation rather than just an arbitrary, you can't do it and that's the end of it. And maybe the government can send some signals that this isn't the end. We're just doing this right now so that we can figure out how there can be some government regulation and understanding of this, and then it can come back in.
So I have a question for you specifically, right? Given like Nigeria's home base, you're supporting, let's say, a large crypto company in Nigeria today, right now, and you get this regulation. Does this mean you and your team tell that customer we can't serve you anymore in order to comply with the law? Like, how does that work?
Yeah, no. So that's well, we that's true. It's not clear. We don't know, right? So most companies, so we don't serve any company that doesn't have a license to operate, first of all. So if they have a license to operate and they have a need for KYC, and they're in Nigeria for now, we will, and they have a company in Nigeria, we will definitely sell them that KYC as long as the owner of the identity approves. So yeah, no, I think it's something that we're going to look at. We do have crypto companies that are using us. I haven't seen any, slowdown in transactions so far that that we should be looking at. But yeah, no, it's something that just happened, and I'm sure we'll be having a conversation with them at some point. But no, nobody has come to say stop, and we'll be having that conversation shortly.
The problem is, it's also not just, you can't sort of say, well, this company deals in crypto and therefore I'm not going to serve them, because many companies actually deal with multiple things. They may be, they do mobile money transfers. They may allow people to pay their utility bill, and they also had a crypto arm, or they had a crypto product. If you basically say, no, we can't work with you anymore because you also had a crypto product, well, now somebody can't pay their utility bill, or they can't send money to grandma. That's a pretty heavy-handed way. So I think CJ's right, is like, we are sort of waiting for clarity, but right now the circular states it's specifically about transacting between fiat and crypto in Nigeria. And so I don't think any of us, our companies actually transact in, or facilitate actual transactions in crypto.
Benji, to answer the question, well, regulatory approach across the country is across the continent is quite different, right? So in South Africa and Ghana, there's a more consultative approach. In Nigeria, it's consultative, but sometimes things just pop out of the blue. That makes it really difficult to do business. But what we try to do is to be very hands-on with our customers. Because we've built a lot of these relationships with regulators, we literally hold the hands of our customers and tell them that, look, I'm going to speak to the regulator, try to understand what's going on, and give you really good feedback so that you could, have some contingency plans that at this time compliant, right? Because the thing about trying to be always having a knee-jerk reaction is that knee-jerk reaction could also lead into another, hole. So you always need to think longevity, you always need to think risk, have a risk model, and make decisions based on that risk model. And we really help our customers do that because we figured that out across multiple markets.
Mm-hmm. Paul, you've traveled to many different countries across the African continent. To lighten the mood a little bit, tell me about a fun story you had talking to a regulator. Don't say the country, about getting access. If you have any off the top of your head, if you don't, I have more questions for you.
I mean, I think that this is an East African country. My first time I went there, it was just so unheard of. Telling me that I should host all of my data, I won't call it my data, but all of my infrastructure in-house, and that the service in itself, the way it was meant to be built, was to enable intra-Africa interactions, right? And so just that blockage, I had to start to think about, how do we even do this? Like, if you tell us that don't fly data out of the country, but it's the internet. Already your people are on Facebook, so their data is basically out of the country already. How do you enforce that? So that was a very interesting experience, but that experience also led us to sort of like really figure out how to innovate with regulation, because you can't just go into a market and ignore what the existing regulation is. It will come back to bite you no matter what. So as it stands now for us, it's really about the law says do X, you do it, and try as much as possible to be innovative on the technology end. The law also is always designed, it has, I don't call it a loophole, but it's designed to enable itself change for the purposes. And hopefully the political system and the legal system in those countries will be able to support it. So this was probably one of the interesting experiences, just being taken aback. Countries have different approaches. Some countries tend to be pro Ghana or pro Nigeria. They just want their own nationals to handle certain things. And that is so understandable for me. And so I'd rather partner with a local national than, go out of my way to try to get access. It just, being compliant is just the way to go. So, yeah.
I want to maybe just give people a little hope, because I think we've been, hitting on regulators and on how things don't work, or they're frustrating, or knee-jerk reactions. But actually, my experience talking to people in government in Africa has actually been, in many cases, refreshing. I know this may sound surprising given the conversation we've just been having, but often the people who work inside the ID authorities are actually, you're preaching to the choir. They understand the importance both of the data and the utility of it when used properly, to enable people to get access to bank accounts, to enable people to get access to new types of financial services, to send money home. They often are not the most powerful people in the room. So sometimes the most powerful people in the room are, it's somebody else. It's a different institution. Maybe it's a politician. And there's always a balance that they're walking between trying to do their job as best they can with the very limited resources they have, often very limited technical staff, not a lot of money, trying to fix servers, over a weekend when something breaks, importing parts, and then also trying to work with the different constituencies they have, which of course starts with their citizenry, but then includes banks, telecoms, startups even. And so I've found that there is a process of building trust, but ultimately most of the people we've interacted with at ID authorities, when you give them enough time and you manage to get them to spend enough time with you, Like usually they're trying to do the right thing, but they have these other forces that they have to balance. And so I think, it's a journey, and we're still in the early chapters of this story.
Very early.
And thanks for that, Mark. We also will be getting to audience questions as well. And don't worry, we'll lighten up the room a little bit more as well. CJ, I have a question for you here from Guerra, who's currently in Nairobi, originally Ugandan. And she asks, what kinds of solutions are in place for KYC for the bottom of the pyramid use cases? For example, undocumented individual or feature phone users in the ID. Do models like agency banking play a role in solving this, or how do you support them?
Yes, so agency banking is actually something that's really becoming really large, particularly with our logistics engine of 10,000 agents. The requests from many of our banking customers have been coming through. Now, one of the ways we support unbanked, is being in the enrollment services ecosystem. So, for example, we easily plug into our customers' workflow now, not just for account opening, where we can do the remote or contactless account opening with facial recognition, like many of us have, but we're also now able to deploy to register that customer so that customer can get an in as well through our own service. So we offer that service to our financial institution of fintech customers. So they're no longer limited. Yes, they have, a pool of maybe 50 million people they can give on-demand services to, but they now also have a pool of another 140 million with us that they can pull in to give more services to and register through us. So this is one of the ways, being in the enrollment services ecosystem and coming up with innovative ways to deploy to rural areas so that we can register people. This is one of the ways we're trying to get the unbanked in and help support financial inclusion.
Yeah, Benji, just to add to that, well, for us, we connect directly to telco databases. Mobile money, as you know, across Africa is like the widest and deepest financial play. And then so basically you're able to cover as much of the population as possible and use that as a KYC, basically leverage that data for KYC. So we were able to support feature phones, etc.
Mark, do you guys also support feature phones for now?
One of the challenges, we've looked at this, and I have to say one of the challenges with telco data is a lot of it's just not very good. So we've actually had, we've had partnerships we put in place with banks and telecoms where a bank wants to offer a USSD product and they want to be able to complete the KYC with a very light touch. Just verifying, for example, name and phone number of a user that's been registered previously with that telco. And then you dig into the telco data and 40 to 50% of it is junk or incomplete. And so the challenge we've had, of course, this is specific to each telco, each country. You can't sort of draw.
It'll be different in every country.
Every situation is going to be different. But part of the problem is, until very recently, telecoms, except for in Kenya, until very recently, telecoms weren't financial services institutions. They were telecoms. So doing KYC wasn't really ever a fraud requirement for their business. It was only a regulatory requirement. So they always did the bare minimum. It wasn't until the fines started in Nigeria about 5 years ago that the telecoms started actually stepping up the levels of KYC. But even then, it was kind of like someone who does the bare minimum to get by, as opposed to doing something that's really essential for your business. For banks and anybody else who's doing financial services, they can't have fraud and they can't have money laundering in their system. So they always cared about KYC. Telecoms have really only been recently waking up to this, let's say the last 3-4 years. And of course, many SIMs are more than 3 or 4 years old. So there's always been a problem we've seen with the quality of the telecom data. We've actually done projects with telecoms to help them clean up or do re-enrollments for some of their user base, because you have a problem of this data is not useful enough or it's not powerful enough in some cases.
Yeah, but Mark, what has happened recently is that most governments have mandated re-enrollment. So if you go to Kenya, Tanzania, even Ghana here, it's re-enrollment because they realize that a lot of the systems, a lot of the mobile money fraud is really because of what you're talking about. So I think that eventually this will change. There's the World Bank support for most countries to do re-enrollment of these systems, and that wouldn't be a problem we'll keep on facing moving forward. So
the problem though is it still comes down to the agent, right? And so what are the incentives you set for the agent who's doing those re-enrollments? And so if you have problems, we've seen significant situations where we did a project for a public sector bank in Nigeria, and we saw that, we looked at a sample set across, I think, 6 states, relatively low fraud, and then one state all of a sudden, boom, 15, 20% fraud rates. And it was because it was down to one specific agent network that had been compromised. And so the good thing about, at least as you're doing this now, you've got more visibility, you can start isolating the problems. But you're still going to have problems whenever you're doing things at scale with potential fraud.
Yeah, that's true. That's true. But
a couple of things also on SMS products and telcos. I'm sorry. A couple of things also on the telcos is telcos are not going to be, I think, probably KYC companies in the long term. So Mark said, for the most part, that their data is still dirty, and even as they grow their data, telcos are going to need additional data as a service. Because this, when we talk about KYC, right? KYC is not really just about the ID verification piece of it. The ID verification piece of KYC really supports just payments in the technology stack. But the one layer up, in the payment stack. So there's the ID verification that supports payments, and one layer up, you actually have the data as a service, which is now where you talk about the employment information data as a service, or addressing information as a service, and other data sets that you can use to build a fuller profile of a customer for high value loans and products. Because remember, this issue of we're talking about is not really just about micro lending. The biggest issue is it really even probably things like the ability for Nigerians to get home loans, or Africans to get home loans, which is even going to need a much deeper set of data as a service focus than just the simple KYC than what I think telcos can provide. And eventually that's where we're going to go. By the way, telcos today even use us. So even for telcos in Nigeria today, to get a phone, we are the verification partner that approves, that does the KYC for their high value phones, because they know that they need that KYC. And then just to go back to the SMS supporting product, apart from the fact that we reach on banks, it's not really necessarily SMS. I think we have about maybe 100 million, 110 million phones. We actually have the ability to do phone number onboarding without the telco. So because we are also very local in Nigeria and direct source with all authoritative sources of identity, we also can verify many of our customers with their phone number, so that they don't even have to have a smartphone for that as well. And banks are currently using us for that service.
So I know there's lots of questions coming in, and I just want to listen. I've been learning so much on this call so far. There are people who are listening to you all right now. A lot of our audience are people who are considering building new companies, who are maybe diaspora looking at moving back home. Looking at yourselves 5 to 6 years ago, what's the most important piece of advice you would tell yourself 5 to 6 years ago, knowing what you know today? We'll go Mark, Paul, and then SCJ.
So I think the thing that you have to be prepared for is that you want to be obstinate in your vision for the future and how you think things can work, but very flexible in terms of the sequencing and the tactics and the learnings, because those are going to come from your customers. And I think, Ben, you've said something to me about this early on in the growth of Nala. Like, every time you spent more time with your customers, like every day you spent more time with your customers, like the faster you learned, the faster you got better at building something. So I think there's just sort of there's no shortcut. But if you have sort of very clear vision, you can keep heading towards that vision, but the path up the mountain may change, and you got to get comfortable with that. And you're going to find that path by talking to customers.
Nice. Paul?
Yeah, I would say that build local intelligence. That's really what will make you go far. because Africa is very diverse, 54 countries. We're trying to implement after. It already has its challenges, but local intelligence would make you win by far. If you're able to build that local intelligence and build local relationships, that would make you evolve and grow faster and have that unique advantage that others wouldn't have.
CJ.
Yeah, no, for me, what I would tell myself is, don't be afraid of logistics. There are many times where I just told myself, this is not going to work. And maybe we didn't dive in as fast as we did. We did anyway. But, one thing I've realized is that you can go to the market or you can bring the market to you. Depending on how you dream and how you talk to customers and how you listen. So that's one of the things I would tell myself much earlier.
To the audience, building a company is hard. Building in Africa at scale is even harder, in my opinion. We are very lucky and fortunate to have three wonderful speakers here with us today who have tried their best in building their businesses and are actively trying to grow and scale their businesses even more and successfully. So I want to ask them one final question over here. What is something you each admire about each other? Paul, what do you admire about Mark? Mark, what do you admire about CJ? And CJ, what do you admire about Paul?
Oh, I'll say this, Mark. It's impressive that you're building a company for Africa, away from Africa. I mean, I think it's getting tougher every day. You just need to be on the continent. And so the fact that you're able to do that is great.
Mark on CJ.
Yeah,
go ahead.
I'll say CJ is a very passionate guy. And I think that passion, you heard about the origin story of the company, and it was his business partner's life was on the line. I think the reasons for starting this company, his company, and I think for all of us, but certainly he embodies it, are very personal. And I think that passion is admirable.
Thank you, Mark. Thank you. And I would say this, I've known Mark for about 3 years.
No, yours is to Paul. Yours is to
sorry,
Paul.
Go ahead.
Yeah. No, CJ to Paul.
Do you want to say something nice about me too, CJ? That's
no, of course I will. Of course I will. I would say so. I don't know Paul. I know Mark, but every time I see Paul, and on social media, he's like blazing across Africa, and I'm like, God damn, this guy really has the energy to fly. I appreciate that energy to I'm in Egypt. I'm here. We're doing this. And I think this is what is going to eventually bring Africa together, that kind of behavior in terms of building. So I really respect that about him. And with Mark, I've known Mark for 3 years, just the perseverance, Mark has, coming to another continent, having the courage to do so, he's talked to us in the past, talked to so many people. And I really respect the fact that, he's just not saying, he sees a place where he can contribute to solving the problem and is like, hey, let's go ahead and try to do it. I think that's a lot of courage, and I respect him for that for sure.
Okay, and me too, CJ. I think that what you built is really impressive. We try to stay away from the enrollment space because it's really, challenging, and you have to talk to very important people. So big respect on all of that work you've done. It's gonna help all of us.
Thank you.
Awesome. Well, ladies and gentlemen, thank you so much for tuning in. I know we've got, so many people from different countries around the continent. We've plugged the websites for all of these different founders here in the chat. So feel free to look at their work and reach out to them as well if you'd like to learn more, if you'd like to test out what they have available, or just, want to build something on top of what they've built. So definitely check them out. These are founders I really admire personally. And so I really appreciate each three of you taking your time to join us this evening.